Good morning, everyone. On behalf of Vetiva Capital and our media partners at Frontier Africa Report, you're welcome to another edition of the Vetiva Breakfast Meeting. In today's session, we'll be hearing from CGF Boss, who will be giving us updates on the BRVM. We'll also have speaking to us today our capital market analysts, who give us a rundown of the global equities market and fixed income market. We will then round up with headlines from across Africa by our media partners at Frontier Africa Report. We would like everyone to note that this meeting is being recorded and may be shared with third parties. It is also being streamed live on our Vetiva online Facebook page if you'd prefer to view from that platform. Finally, during the course of the 30-minute session, if you have any questions, you may send them in using any of the chat functions available on Zoom or Facebook. However, at the end of the session, we'll have a Q&A segment where if you prefer to speak, you can speak and ask your questions. We'll now be starting off with Simbiat from our Global Equities desk, who will give us a rundown of some African markets. Good morning, Simbiat.
Hi, good morning. Good morning, everybody. I'll be running through the Ghana and Nigerian stock exchange markets. Starting off with Ghana, the first weekday of trading in market started on a flat note as the composite index remained unchanged, still representing a year-to-date gain of 36.6%. Activity level declined significantly in the session as we saw 52% decline in volume and also 65% decline in turnover when compared to Friday's trading session. There were no gainers nor losers in the session, even as we saw Societe Generale recording the highest volume of trade in that session, which was about 53.42% of the total volume yesterday. Going into today, we expect activity levels to remain flat with names like MTN, Cowbank, and Societe Generale dominating market activity. Going to the Nigerian equities markets, the week started off on a marginally positive note as ASI closed up 3 basis points. We saw gains in counters like Access, Livestock, Owando, UP, and UCAP. Market activity remained mixed as volume improved significantly by 35%, while turnover fell by about 7%. Relating that to the sectors, we saw increased activity level in the consumer goods space as volume traded up by about 51% and turnover also improved as well by about 101%. Stocks like flour mills, Honeywell, Livestock, Nascon contributed to that. So our expectation for today, we expect to see mixed activity levels. However, we do anticipate profit taking by investors on some counters that have seen gains in recent sessions. Even as we expect the positive patronage in the banking sectors to persist. That'll be all. Thank you.
Thank you very much, Simbiat. Next up, we'll have Sheikh, who will give us updates on the BRVM. Good morning, Sheikh.
Hello, good morning. On this 26-week session of the year, the BRVM experienced last week a little setback compared to its 3 last weekly upward trend. So you can say through the BRVM composite that experienced a setback by 1.07% this week. It is important to note that the market didn't register such a counter performance. It's 2 months. So the drop back in the market was mainly justified by the lower performance of certain stocks, such like Societe Generale, CITAB, Chorus Bank, and BC. And on the other hand, the investor rushed into capitalizing on the good performing stocks, and that led to a decline in the market. In terms of sectorial index, BRVM industry was the only one that showed some growth with plus 0.85%, plus 0.85%, and BRVM distribution by plus 0.07%, so literally flat. So the total volume of transaction this past week was amounting around 2.8 billion CFA. In terms of the good performer of the week, Uniwax showed some good performance with its share that increased by 16%. And in this since October 2020, it has been we've been monitoring an upward trend with Uniwax. And the last week was its best performance since the last 16 months. So this trend was mainly noticed on the June 29th and 30th trading session, with respective increases of 7.2% and 7.4%. As a reminder, the net income reached 667 million CFA in the first quarter of 2021, which was a plus 182%, driven by a 90% increase in turnover following a vigorous recovery of loincloth demand. Other performers were Sicor with plus 13% and Solibra Ivory Coast with 7.51% increase in its share price. The lower performers were mainly led by Bolloré, Citab, and Tractafric, with on average 10.8% decrease for each stock. In terms of news, the firm Africa Bourse received the listing sponsor on the West African market, listing sponsor being the license by the BRVM to provide to help small and medium companies to be able to borrow money in the market. I think the first licenses were issued in the last year. The approval of also Global Capital to become an investment and brokerage firm in the market. The BRVM top 10 index has changed with CIE, Ivory Coast, Ora Group, and Bolloré securities, which have entered, while BC Ivory Coast, Bank of Africa, Benin, and Burkina Faso securities were exited the index. Also, it is important to note Total Ivory Coast changed its name and became Total Energies Marketing Ivory Coast, as notified by the ordinary and extraordinary shareholder meeting held on June 21st. With the bond market, the market closed its capitalization with a setback of minus 0.1%. The weekly value traded stood at 13 billion CFA against 9.47 last year, mainly marked by a transaction of Ivory Coast Sukuk bonds for a total amount of 12 billion. In the fixed income market, the state of Ivory Coast and Mali requested in the market a total of 85 billion, with 60 billion in treasury bills by Ivory Coast and 25 billion by in treasury bonds. The market offered 111 billion CFA for a coverage rate of 131%. So only 76 billion was retained in the market. The issue of the 84-month Mali Treasury bond on June 30th was the most popular transaction, and they captured 169% of the offer by the markets. In the coming week, in terms of fixed income, it is expected to see in the market Ivory Coast Treasury bills, Burkina Faso Treasury bills, and the state of Niger Treasury bonds for a total amount of 125 billion CFA. That's it for the BRVM this week. Thank you.
Thank you very much, Sheikh, for that update. We'll now be moving to Omorege, who'll give us a rundown of the fixed income market. Good morning, Omorege.
Good morning, Victoria. Good morning, everybody. System liquidity for yesterday improved significantly from what we saw on Friday, as it opened about 170.94 billion positive from the 36.09 billion negative that was recorded on Friday. This significant improvement in system liquidity, coupled with the lack of any major funding need in the market yesterday, caused interbank rate to losing by an average of 125 basis points, as OBB and overnight rate closed at 10.25% and 10.75% respectively. Our expectation for today is that the money market will trade at similar levels, barring any significant change to system liquidity. The parallel market maintained to trade at 503 Naira to $1 on Monday, while the opening level for the earning window was about 411.50 Naira to $1. The highest rate that was recorded during yesterday was 420.86 Naira to $1, while the earning window closed at 411.13 Naira to $1, which is a 12 kobo appreciation from where it closed on Friday. Brent crude gained about 0.41% yesterday to close at $77.48 per barrel, as OPEC and its allies failed to hike oil production yesterday while postponing the output meeting indefinitely. We also saw WTI crude gain by about 2.04% to close at $76.69 per barrel. The T-bills market opened this week to a very tepid trading session with few buy-side interest seen on the long end of the benchmark curve. Offers in the market yesterday were largely on the March and the June maturities, while trades were consummated majorly on the CBN Special NTB, that's the August 30th, 2021 maturity, and the May 31st, 2022, and the newly issued one-year paper, which is the June 30th, 2022. Average benchmark rate for yesterday increased by about 4 basis points to close at 6.24%. It was a similar story in the OMO segment, as activity in that space was also muted, with few trades dead on the October 12, 2021 maturity, while average benchmark rates increased by about 7 basis points to close at 9.53%. The bonds market also opened the week on a very quiet note, as market participants await the Q3 FGM bond issuance calendar. We observed interest along the mid to long end of the benchmark curve, especially on the 2035 and the 2049 maturities, while few trades were executed across the board, particularly on the 2027, 2035, and the 2049 papers. Overall, average benchmark rates remained unchanged at 12.43% from the previous trading session. In the Eurobond space, it was a very quiet trading session across the sovereign and corporate segment, with rates remaining unchanged day on day on all corporates Eurobond, while few trades were executed on some of the sovereign maturities. Trades executed on that end were majorly on the Nigeria 2030 maturity and the Nigeria 2049 maturity, with average rate inching up by about 2.5 basis points across those two maturities. Our expectation for today is that the bonds market will trade on a quiet note with a slightly bullish undertone as market continue to wait on the release of the Q3 FGN bond auction calendar, while we expect the T-bills market to trade in line with system liquidity today. That'll be all for fixed income. Thank you very much.
Thank you very much, Omorigi. We will now round up with Temple, who will give us updates from across Africa. Good morning, Temple.
Good morning. Thanks a great deal. So starting from the northern part of Africa, we all know that Egypt, Saudi Arabia, and of course Iraq have been trying to rebuild their relationship, which had strained since around 1990. In recent times, that has been playing out, and that is also giving a rise to positive relationships between Egypt, Iraq, and of course Jordan, because sometimes in June they had a summit that also brought them all together to deliberate on some of the key issues that they've been having all along. And now that is bringing back some healthier relationship between these three countries. So now they're going to be having a joint business council, which will be established to oversee the business that is beginning to really grow between these member nations. We know that recently the trade exchange between Egypt and Iraq had increased. Total volume of trade exchange between Egypt and Iraq alone was around $747 million for 2020 alone, compared to $551 million in 2019. So the 36% increase in that trade ties at this point is beginning to renew their interest. So basically, this joint business council will help to foster the relationship, the business relationship that the countries have, and that will also include Jordan in a way. We all know again that central banks had actually shrugged the purchase of gold in recent time due to COVID-19 and how much of constraints that has actually brought to global commodities markets. Though quite a number of central banks globally are beginning to renew their interest in gold lately. We know that Serbia, the Central Bank of Serbia, has indicated interest in buying gold again. Thailand is also going to be doing the same thing. And of course, Ghana, a few weeks ago, also announced that it will now resume the purchase of gold. So that is something that we do hope will be a newer game changer basically in the commodities or metal markets world going forward, as more companies or banks, rather central banks and reserve banks come on stream. This report is actually on Bloomberg. We understand that it is due to inflation that is also beginning to rise on the global markets due to recovery from COVID-19 globally. IATF, which is the trade fair of Afreximbank, bringing together AFCFTA Secretariat and of course the African Union and a couple of other multilateral institutions in Africa. It was scheduled to hold in Rwanda in December before, but Rwanda has now it has been declared rather by the advisory council that Rwanda won't be able to host the event this year. Former President Olusegun Obasanjo, who's the chairman of the advisory council, made the announcement recently. So it's now going to hold in November, between November the 15th and 21st in Durban, South Africa. That's where they're heading now for that. Basically, the effect of COVID-19 is what has drawn back Rwanda from being able to host the trade fair this year. We understand that in Cote d'Ivoire, the International Islamic Trade Finance Corporation for West Africa, ITFC, has just signed an MOU of 10 million euros with Bridge Bank in Cote d'Ivoire. It is basically to help them finance the COVID-19 recovery, create jobs, and support SMEs in the private sector. In the private sector of that country. ITFC is basically a member of the Islamic Development Bank Group. Eastern part of Africa, Tanzania is becoming more ambitious with its COVID-19 fight. The president, we know, recently did set up a special committee to oversee the effects of COVID-19, the damage it has done, and the penetration of COVID-19, which the late president had denied. So they did come up with quite a number of recommendations. And one of the things that they're trying to do now is to basically manufacture COVID-19 vaccine in the country, and basically to reduce importation and manage the exchange rates and all of that. We understand that they don't plan to export it. How they're going to implement that is yet to be known. Treasury in Kenya is to present clearance from National Assembly for loans over any loans beyond 1 billion Kenyan shillings to get approval from the National Assembly before that happens. Kenya revenue tax collection has also hit 8-year high, some over 1.6 trillion shillings for 2020-2021 year, because their calendar year has just begun. The new calendar year has just begun. So a review of the previous calendar year or fiscal year, beg your pardon, will basically now be coming out going forward. These are some of the headlines we can share with you this morning. Thank you for listening.
Thank you very much, Temple. We have now come to the Q&A session. If you have any questions, you may use the raise hand function so that we can unmute you and you may speak. But if you prefer not to speak, you can use the chat function. And if you're joining us from Facebook, you can use the comment section, and then we'll read your questions out so that they'll be answered. Okay, it looks like we have a question. It says, good morning. I would like to ask about your outlook on fixed income yield over Q3 2021.
Okay, good morning, and thank you for that question. For Q3, our views are that we'll see a quarter of two sides, if I may use that word. So currently, yields have dipped a bit from what we've seen coming from May and early June, and this is on the back of the strong maturity profile for July. Basically, we have over 800 billion coming into the system from bond coupon maturities, promissory note maturities, bond maturities for the July 2021, coupon inflows, amongst others. Basically, we also have some corporate papers coming in, commercial papers, and corporate bonds, coupons as well. So the strong maturity profile has created some sort of buy-side frenzy in the market. Basically, what we've seen, although in the last couple of days, is that has since moderated a bit, as players like Omorige noted are generally just on the sidelines, waiting to see again what the DMO is going to release with respect to the calendar, and also waiting to see what the July bond auction typically would look like. But again, we expect, the effect of the strong maturity profile to linger into, July, into ending of July. Then August, we expect rate to probably still stay flat or some slight reversal into the upward region. But by August, September, we would expect that we'll see some level of reversal in yields again, and things will push back up from these low levels. But further down the line, the question becomes, where is the debt management office with respect to their, their borrowing plan for the rest of the year? Would they have gone so far ahead? Because over the course of the year, we've seen them overborrow and overborrow and overborrow, basically, because market seems strong for them. Market players will throw in bids that are, basically juicy and attractive to the DMO, and they've sold into that strength over the last couple of months. So are they far ahead of that borrowing plan, or this borrowing need is still so strong and huge to the extent that they'll still continue borrowing more? That's what will determine the tone for the last quarter of the year, basically. And so we continue to observe to see how things pan out. But for the third quarter, we see two sides, some reversals towards the end of the quarter, but coming into the quarter, we see that yields will sustain a buy-side tempo in the interim. I think that pretty much answers that question. Thank you.
Thank you very much, Dapo. We also have Adeomi who's raising a hand. Adeomi, you may speak now.
All right, thank you very much. Am I audible, please?
Yes, we can hear you.
Okay, thank you. So on the back of that response in the fixed income market, I just wanted to inquire, For several weeks or few months now, the secondary market on the fixed income side has been, especially on the long end, has been a bit quiet. A lot of people that I've spoken with say that it's more or less a one-sided market. Supply is very thin, and also the spreads between the bid and the offer are also quite huge. I mean, with this liquidity that's coming in now, would that make the situation better or worse? Because people want to buy, but is there any supply? Are there that are willing to provide that for liquidity within the market so that there can be active two-way trading? Because right now it seems that the only active trading that's seen is on the short end of the curve on the bill side, while the long end is fairly muted.
Okay, thank you, Adeomi, for the question. It's been, due to a host of different factors. And I'd just like to also mention that I think about 2015, 2016, the bond market was typically the very quiet one amongst most of the market. So you see traders just playing in moves largely. But coming into 2019, into 20, especially after the CBN pronounced that local players are excluded from the OMO market, the strong liquidity had to find a new home. And looking at the yields trajectory at that point in 2020, it became that the bonds market was the place to go. So we saw strong activity on the back of that. It looks like we're coming back again to where we were pre CBN's issue of excluding the local players. And I spoke to that for context. Now, on the long end of the bond yield curve, we've not seen so much activity like you rightly noted. And like I mentioned as well, the strong maturity profile in the month of July sort of drove some early buy interest, and that has kept things, especially towards the end of May into June. But before then, we had yields at the single digit region in 2020, end of 20 through 2020, basically, especially at the end of 2020. But in 2021, COVID was over. Everybody in the government had to borrow. We had to see some reversal. It was imminent. And so on the back of that, we had proprietary traders coming into the market to short sell on a good number of bonds heavily. Now, on the long end, we've seen the move between 2049s, 2045s, and 2050s offered by the DMO. But people that were short at some point when DMO switched plans and moved to another bond needed to cover. So you'll see that people are more on the buy side than on the sell side. People that will provide supply to short sell are now being very cautious because they've been burnt in the last couple of months. The PFAs, who would naturally be the large holders of these bonds, are also not carrying them at very good enough levels to try to maybe say switch between maturities. So they'll typically not supply as well. The only supplier then becomes the DMO and a few asset managers that need to meet obligations or that are in profit and want to switch between positions, basically. And that has somewhat limited the level of supply we have seen in that space, especially on the long end in recent times. And that also is the reason why we've had very wide bid-ask spreads, especially on the long end of the curve, pardon me. Now, if we look at what's going to happen with the maturity, are we going to get supply? I don't think so. The maturity makes people want to, again, buy because they have cash. If they are not able to buy, if there's no supply at good levels, they rather stay on the short end and place their funds, at the 10% that we are seeing recently. So will there be supply on the back of this maturity? I don't think so. Supply will probably come post-maturity when the sell side players that seems to then believe that, I expect a correction would say that, okay, people have bought again, I can sell short and come and cover a couple of weeks down the line or at the auction when there's supply. And that will most likely push things up marginally towards the bond auction after the 15 when the maturities will hit the system. But for now, we also believe that the CBN will also take out these funds through CRR debits. But for now, market will still continue to be very cautious, waiting for DMO to release the print and waiting for all the buy side that can probably happen prior to the maturity. And after that, we can see some level of supply towards the bond auction, which will be sometimes on the 22nd, on the second to the last week of the month, basically. I hope that answers your question. Thank you.
Thank you very much, Dapo. Just before we end today's meeting, we would like to remind everyone that we'll be having a special edition tomorrow where our banking analyst will be speaking on an investment case for Nigerian banks. We hope that you join us tomorrow and we have a productive day ahead. Thank you and good morning.